Hey everyone, Trader Tim from E-mini Mind doing a trade recap video for Thursday, the 25th of April 2019. Going to look at the E-mini S&P. Pretty great week here in the ES. I didn't have a ton of trades, as has been sort of the theme for really the last 3 or 4 weeks, but finally caught a couple of good runners, and we can run through those from Tuesday, Wednesday, Thursday. Tuesday in the trading room, I posted the trade session, and there was a long that I took early in the day off a kind of a classic little double bottom, and then right after we closed, I guess we'll start with that. So right after the room kind of wrapped up on Tuesday, one thing I was talking about in those kind of situations, so here's Tuesday on the 30-minute chart. So you can see the really strong 1 hour, 2 hour, 3 hours of pretty much straight up. And then if I go to the daily chart here on the ES, you can see that really big body candle, open near lows, close near highs, breaking above the box that we had been in prior for, a week, like so. So really good opportunity with not a lot of resistance over here to the left. I mean, the last little bit here, the last box you can draw, we are ever so close of breaking out of. And then when we do that, a move above 46 and a quarter, there's just nothing above us. It's just complete open space. So I like to try and get into trades just before a breakout if I can, but if there's not a setup, or if we're not pulling back, then what I'll look to do is just use a buy stop one tick above highs, whether it's the high of the box, the high of the prior day. You can use it above the all-time high, and it's just a way to say, okay, I want to be in the trade in the direction as the momentum sort of punches through the ceiling, and I'm expecting not just a punch through, but an immediate follow of buyers to really shoot the thing higher. And so let's see, Tuesday, we kind of went into this weird channel here later, not really later in the morning, but maybe 45 minutes in, started developing this channel, and then we made a new high, and instead of pulling back like we had done 3 times here, 4 times if you want to count this, we started basing and really getting into this tight range right at highs. So I did a little diagram that I posted on Twitter and Facebook with this setup here, but essentially just using a buy stop one tick above, so 29.25 and a quarter, and you can see when we break through, it's just an immediate push higher, and there's not really a pullback to speak of that you could buy at a 50%. So it's good to have a little bit of flexibility as a trader. If you set up some daily loss limits, you're kind of giving yourself permission to, place trades within a sandbox of risk. And, sometimes you don't get the follow through, but in this case, because we're so close to highs and the trend on the day was really strong, it was, I saw it as a good opportunity, and it worked out pretty nicely. And all I did was just to trail my stop, was just trail the swing lows here. Every time we'd kind of either double top, trail my swing low, or make a high, pull back, make a new high. Just keep bringing your stop up underneath each swing low until we break one of them. And a little bit later in the morning we did, pulled back and broke the swing low over here. Another way you could trail your stop is just with a 5-minute chart. You just come in here. Here's the breakout of the high right here. And you can just put your stop underneath, start with like a 1.5 stop, and then the trade takes off, and that's where you need to have the most patience. At the onset of the trade, when you're up 2 or 3 points, you know, trying, or even 2 or 3 ticks, you don't want to aggressively tighten your stop right away because you're going to get, ticked out. You get stopped out before the trade even has a chance to go. So if you can have a little bit of patience in the first 5 minutes, then the next bar forms, and look at how much higher its low is. So this second candle's low is a 27.75. This candle's low is a 25. So that's almost 3 points. And when this candle closes and we start the new one, then you can just move your stop up underneath the candle's low and just keep doing that until, you get a bigger reversal up here that breaks the candle's low. So that's a really great way to, stay in winning trades longer. But you got to have the patience to, if you have to sit on your hands, do it. If you have to minimize your trade ladder, do it. Whatever it takes to say, okay, I've established this is my risk for the trade, and I'm comfortable putting on a trade with 2 contracts in the ES, risking $150, and you can't micromanage it then, and as soon as you put on the trade, say, well, now I'm getting a little nervous, and I'm going to move my stop up to 2 ticks below my entry. Well, you're essentially sabotaging yourself. So don't do that. The next thing I wanted to highlight on Wednesday, let's see, 738. So here's a good example. Both yesterday and today, the 2 trades that I had were shorts. And so you might say, well, the daily trend is clearly up. Yes, but intraday there can be these, longer trends or starts of trends that can be going against the daily trend, and that's totally okay. If you're day trading, intraday trading, it's totally okay to take a trade that's counter trend to the daily chart. So coming into Wednesday, you have a big body candle like this, you usually get one of 2 things happening. One more day of big body candle, or the flag part of the bull flag. And that's exactly what we got Wednesday. And then coming into today, you either get, here's the kind of the first consolidation day, and then you either get another consolidation day. Sometimes you get this hammer, or a day where we dip and then rally. I'm considering like the start of the pole kind of back here. So you kind of have move halfway back if you draw from lows to highs. The market pulled back halfway, so that's all well and good. But my trade on Wednesday, 738, it was a short, and it was the high tick of, let's see, it was a high tick at highs, 738. Oops, let me go forward here, wrong day. Tuesday, Wednesday. There we go. That makes more sense. So it was in here. Wednesday was a much messier open than Tuesday. And so right off the bat, things looked a lot different. And so I was also expecting a little bit more range-bound price action because we were inside the prior day and kind of expecting a couple days of that. And 738 was over here. So we came up to essentially this, we made a double top from Tuesday's high, and then this high was about a point away from the high from Tuesday. And so as I come in here, we had a high tick that lined up at the high price. We had a nice series of higher highs and higher lows, which means we have some swing lows we can use as reference points. This was the most recent swing low, and so I drew from highs down to the very first. I'm not really counting this low here. I'm coming down to the first low that breaks the prior swing low. And we had a nice setup at 37.25. It didn't get a ton of follow through. We sold off, hit the first target, and went a little bit further. And then I just drew up the full retracement, put my stop above that 61.8, and then I ended up coming in here. We formed this swing high and sold off a little bit, and I ended up just moving my stop down. I split my stop up, so I left half up here at 37.75s, and then I put half above here at 36.75. So it's okay to have two exit points, just like I might use an aggressive trail stop versus a conservative one. You can if you've got a couple of contracts left, you can certainly have multiple stop placements. So that was really it. Then we rallied again, and whenever I see that, like I see a setup fail, so the short failed, and then we rallied into new highs. We didn't get another high tick, but then things just kind of fell off without really getting a quality setup. And it was kind of late in the morning, so I just kind of closed down for the day. You know, remembering it's an inside day, we're probably going to have some consolidation, and without seeing the market get follow through here, I was a little more iffy on taking another setup, short setup up here. So that brings us to today. Today's was 04s. Yeah, I still have it up here. So today looked quite a bit different than yesterday. Much stronger trend off the open, selling off. No real pullback until about 15 minutes in, and this was looking nice. I was interested in a possible short here. We did not come down to the opposing long, but there wasn't really a swing low here for us to break, so I didn't really have any reference point to have a failure of a long. So ended up having no trade there. But what did end up happening is we got a high tick up here at 7:04, 34 minutes into the day. Here's that nice series of higher high, higher low, higher high, higher low. Nice forming swing lows. So as we come down, we have swing lows to break. So we had a high tick. Now the high tick was the high tick of the day. This was not the actual high price of the day. We opened up just a point and a half higher, but we were coming up to the top of the first 30-minute range, and we had this nice uptrend that had formed, and so it was very clear, okay, here is a break of the swing low, and we sold off below it, and so I just used drawing up the very first retracement, a 29.26 even is where I placed my entry, and then we sold off hard. And when something like that happens, so my order goes out there, I start with a 2-point target on the first, usually third is how I break it up, of the contract or of the position. And then when we start doing something like this, I mean, we're talking 7-8 minutes and we just went straight down, I will just revert to trailing highs when we get beyond the negative 61.8. Things are moving down. I draw up the next retracement setup and I can start trailing my stop, keeping it above the 61.8. Then all of a sudden, boom, we drop a point, we drop another point, and my stop is above the next 61.8. I'll just take that stop and just as best I can trail each candle's high and just be kind of hovering over the dome, clicking on my order and just dragging it down, rather than just getting excited and hitting the flatten button. Oh, we dropped a point, I got to get out. I'd rather tighten my stop aggressively so that if we go lower, I can still be in the trade. And so it's just, tighten the stop, tighten it down, 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 all the way. I think it was a 1750. Yeah, 1750 is where I ended up having my stop down here, and then we bounced. We did get a low tick down here, but again, there wasn't really a swing high for us to take out to be able to take along. Plus, we were underneath this horizontal line is the first 30-minute range, the low of the first 30-minute range. So I don't really like longs right underneath the first 30-minute range. You can expect resistance there, and we did have resistance there as well. I would have been okay with this short, except we had formed a low tick of the day over here, and then when we did break, it just, for whatever reason, things didn't feel. So let's see, we were down, that was a 29.15, so we were close to the low of the big body candle here. Its low is 12.25, and in the back of my mind I was, kind of on the lookout for that hammer day where you have a big body candle to the upside and then some consolidation, and then all of a sudden it's like, whoa, why are we tanking? We just went up with really strong momentum, and what ends up happening is you get that big V reversal in the middle of the day, and that's what we had today here, that V reversal, and then you end up getting a hammer or some sort of similar candle that has a long tail to the downside. And so I felt like after we had made a pretty strong run down, like really quickly within 10 minutes and dropped 10 points, I didn't really have as much confidence. Taking a short up here, okay, that's great. We've got room to go to at least the bottom of the first 30-minute range. But then taking a short down here as we were kind of coming back into this box and approaching the lows of this candle, it didn't excite me as much, the reward to risk. So that's why I ended up passing on this short here. And then I tried for some longs, but nothing really set up. So we got a low tick down here at 31s. It wasn't, I think it was 31s. It wasn't the actual low price, if I recall. But then we didn't really get a pullback to buy into. I would have liked for a long setup that lined up with the bottom of the first 30-minute range, but we didn't get that. So, and then I'm kind of looking at the time, and we're kind of running up. We're a couple hours into the day, and then I just closed down. So that was my day and my week for the ES. So pretty good, even though there weren't, still not having a ton of trades at all. That about same number of trades per week that I would have on some individual days. So, but it just goes to show that if you're focused and you're just kind of following the markets, being patient and waiting for those good setups, I mean, they will reward you. So I hope that was helpful. And if you want to tune in, as always, on Tuesdays, we do a live trading session. You can check that out over at eminimind.com/VIP. And if you're interested in doing a one-on-one or getting involved in the summer apprenticeship, you can shoot me an email and we can talk about that. Tim@eminimind.com. Thanks, and have a great weekend.